partners may have time or interest or possess a new skills or talent, and they spend more time to manage the business. The firm uses their skills and time to get more profit. They run the business in a successful way, and so they have to be paid the compensation either in the form of salary or in the form of commission. The commission calculation, we have to consider two things. One is the commission may be given as a percentage of net profit before charging commission or after charging commission. There are two methods, and so we must know how to calculate commission to the partners. There are two methods to calculate the commission. As I told earlier, first method is percentage of net profit before charging commission. Okay, this is percentage of net profit before charging commission. How to calculate commission? Net profit before commission into rate of commission divided by 100. We have to apply the rate of commission over the net profit. The second one is percentage of net profit after charging such commission. How to calculate the commission? Net profit before commission into rate of commission divided by 100 plus rate of commission. Why we have included the commission with the rate of commission with 100? Because in this case net profit includes the commission, and so we have to use this formula in the problem. If it is given commission percentage of net profit, suppose 10% of net profit after charging commission, in that case we have to use this formula. 10% of net profit before such commission, in that case we have to use this formula. So there are two methods to calculate the commission. Then the next one is journal entries for salary or commission. How we have to pass journal entry? To credit the salary or commission to partner. So here we have to remember one thing, that is salary or commission is an income for the partner and expenses for the firm. So it has to be credited to partner's capital account and debited to P&L appropriation account, because P&L appropriation account is prepared from the viewpoint of the firm, and so it is an expense for the firm and it has to be debited to P&L appropriation account and credited to partner's account. The entry is salary or commission account debtor to partner's capital account if they follow fluctuating capital method, or it has to be credited to fixed capital if they follow fixed capital method. Then to close the salary or commission account, P&L appropriation account debtor to commission or salary account, because already I told salary or commission is an expense for the firm, and so it should be debited to P&L appropriation account. Question number 1, calculation of interest or salary and commission. X and Y are partners in a firm. X is entitled to a salary of rupees 4,000 per month. Y is allowed to get a commission of 10% of net profit after charging commission. Net profit before charging commission and salary was 1,58,000. Calculate the commission amount for Y. What is given in this problem? There are two partners, their name is X and Y. X is allowed to get a salary of 4,000 per month. Here, while calculating the salary, you have to be very careful. You have to be carefully notice whether it is the salary given is a per month salary or yearly salary. So if it is given, per month salary is given, then it has to be converted into per year salary. 4,000 should be multiplied with 12 to get yearly salary or per annum salary. Y is allowed to get a commission of 10% of a net profit after charging commission. While calculating the commission, you have to remember one thing, that is whether it is given net profit after charging commission or net profit before charging commission. Here the net profit after charging commission is given. So the net profit before charging commission and salary was rupees 1,58,000. Calculate the commission amount for Y. We have to calculate the commission amount. First we have to calculate the per annum salary. Per annum salary is 4,000 per month salary. It should be multiplied with 12. So the per annum salary of X is 48,000. Then next step we have to calculate the commission. Commission is given, that is in the problem, commission is calculated 10% of net profit after charging commission is given. So the formula is net profit before commission into rate of commission divided by 100 plus rate of commission. Then the next step we have to calculate a net profit before commission. Net profit before commission minus salary, because salary is included. Okay, net profit before commission is 1,58,000 is the net profit that is given in the problem. So from that we have to deduct 48,000, that is the salary of X. So we will get 1,10,000. Commission, net profit before commission into rate of commission divided by 100 plus rate of commission. Commission is equal to 1,10,000. Here it is given. So we have calculated. So 1,10,000 into the rate of commission is 10%. So here the rate should be added with 100. So 1,10,000 into 10 by 110. The commission of Y is 10,000 rupees. The salary of X is 48,000 and the commission of Y is 10,000. In this way we have to calculate salary and the commission of the partners. Then the next we have to prepare P&L appropriation account. What is P&L appropriation account? It is just an extension of a P&L account. In partnership firm they follow the double entry system. But with the help of a P&L account, they can know or view the net profit, but they do not know what is the divisible profit, what is the real profit that should be distributed among the partners, because the net profit in P&L account we usually don't consider the interest on drawings to the partners, interest on loan, interest on capital, salary, commission of partners, everything is ignored in P&L account. So net profit doesn't consider all those things, and so the partnership firm has to prepare another account. That account is called P&L appropriation account. So P&L appropriation account basis P&L account. Net profit before adjustment is the base for the preparation of a P&L appropriation account. While preparing the P&L appropriation account, we have to consider interest on partner's capital, interest on drawings, interest on loans, partner salary and commission. It is prepared on the basis of partnership deed. Partnership deed mention the interest on partner's capital, interest on drawings, interest on loans, how much salary has to be given to partners, how percentage of commission, all those things are mentioned in partnership deed. So on the basis of partnership deed, we have to prepare P&L appropriation account. And this is the format of P&L appropriation account. Already I told P&L appropriation account is prepared from the viewpoint of the firm. So all the expenses should be debited and all the income of the firm should be credited. Okay. So the base is net profit or net loss before adjustment. Okay. So the debit side loss, net loss, credit side is net profit. So here we have to debit interest on partner's capital, because for the firm gives interest to the partners for their capital contribution, and so it is an income. Like that, interest on drawing is an income. For their drawing, the firm charges the interest, that is an income for the firm, and so it should be credited. And partner salary is an income, expenses, partner's commission is an expenses, interest on partner's loan is also an expense, and so all those items are debited here, and only the partner's interest on drawing should be credited. Finally, we get divisible profit or divisible loss. This profit should be distributed among the partners according to their profit sharing ratio. If the deed is silent, we have to follow equal ratio. Question number 2, preparation of P&L appropriation account. Raman and Kannan are partners in a business. Their profit sharing ratio was 4:1. On 1/4/2020, their capital were Raman 1 lakh, Kannan 80,000. Their accounting year ends on 31st/3/2021. The net profit before adjustment for the year was rupees 3,50,000. Show the P&L appropriation account on the basis of the following information. Interest on capital per annum 5%. Interest on loan account was 10,000. Directly it is given. Drawing 30,000 Raman. Kannan 20,000. Interest on drawing 6% per annum. Before sharing profit to partners, transfer 10% to reserve. These are all the information that is given. That is, the name of the partner is Raman and Kannan. Profit sharing ratio is 4:1. Capital is 1,80,000. Then net profit before adjustment is 3,50,000. Interest percentage on capital is 5%. Then interest on loan is 10,000, drawing is 30,000 and 20,000, but date of drawing is not given. So we have to calculate drawings for 6 months only. Interest on drawings at 6% per annum. So then before sharing the profit to partners, transfer 10% to reserve. These are all the information that are given in the form, in the partnership form accounting. So we have to prepare P&L appropriation account. Let's see how to prepare P&L appropriation account. So here we have to write by net profit brought down before adjustment is 3,50,000. Interest on loan to the partner should be debited because it is an expense for the firm. So that is given directly 10,000 rupees. Then interest on capital. How to calculate? The capital of Raman is 1 lakh and the Kannan is 80,000. So 1 lakh into the 5% is 5,000 rupees. 1 lakh into 5% is 5,000 rupees. Then for Kannan, he invested 80,000. 80,000 into 5% is 4,000. In this way, we have to calculate interest on capital. So the total interest on capital is 9,000. Then interest on drawings. How much they draw during that year? So drawing of the Raman is 30,000. So the percentage of drawing is 6%. We have to calculate interest on drawings for 6 months only because a date is not given. So this is 900 rupees. Then the drawing of Kannan is 20,000. So 20,000 into 6 by 100 into 6 by 12 is 600 rupees. So the interest on drawing for Raman is 900, Kannan is 600. So 1,500 is interest on drawing. So total of the credit side is 3,51,500. How they are going to allocate profit among the partners? Let's see. The total profit available in the firm is 3,51,500 minus 19,000. 19,000 should be deducted from 3,51,500. So the balance is 3,32,500. So from this 3,32,500, 10% should be kept for reserve. 10% of 3,32,500 is 33,250. So 3,32,500 minus 33,250 is equal to how much? That is 2,99,250. This is the real profit or actual profit that should be distributed among the partners. Two partners, name is Raman and Kannan. Raman share is, how much Raman share is? 4. Kannan share is 1. So 2,99,250 into 4 by 5. So 2,99,250 into 4 by 5 is 2,39,400. For Kannan, 2,99,250 into 1 by 5, that is nothing but 59,000 850. In this way, the firm has to distribute the profit among the partners. 10% is allocated for reserve because it is given in the problem. The balance share of the balance remaining profit should be shared between Raman and Kannan in the profit sharing ratio, that is 4:1. So Raman will get a share of 2,39,400. Kannan will get 59,850. In this way, we have to prepare the P&L appropriation. One more problem we will see. Question number 3, P&L appropriation account. Vignesh and Ganesh are partners sharing profit in the ratio of 3:2 with a capital of 1,80,000 respectively. Interest on capital is 8%. Interest on drawing is 10%. The drawing is 30,000 and 20,000. Interest on drawing directly given. You don't need to calculate interest on drawing in this problem. Vignesh is given a salary of rupees 24,000. Ganesh is entitled to a commission of 10%. Net profit before making the above adjustment was rupees 1,20,000. He is given commission of 10% before charging such commission. So you are asked to calculate the P&L appropriation account. This is the solution for question number 3. What are the information that are given in the problem? There are two partners, Vignesh and Ganesh. Vignesh salary 24,000 per annum. So that should be debited here. Okay. Then net profit before adjustment 1,20,000. Then interest on capital. Vignesh is 8% on 1 lakh rupees. So 8% on 1 lakh. 1 lakh into 8%. That is equal to 8,000 rupees. Then Ganesh. The Ganesh invested 80,000 rupees. So 80,000 into 8% is 6,400 rupees. So the total interest on capital is 14,400. Then the interest on drawing is directly given, that is 1,500 and 1,000, 2,500. Then commission total is 1,22,500. So total of the credit side is 1,22,500. Okay. So 1,22,500 minus 38,400. 24,000 plus 14,400. 38,400. If you deduct, you will get how much? 84,100. So 84,100 commission. 84,100 into 10% is 8,410. So the commission is 8,410. Then the divisible profit after the commission, interest on capital and interest on drawing is 75,690. 75,690. That means 1,22,500. We have arrived 75,690 by way of this calculation. 1,22,500 minus 24,000 minus 14,400 minus 8,410. We will get 75,690. So that 75,690 is the divisible profit for the partners. There are two partners, Vignesh and Ganesh. Vignesh's share is how much? Vignesh's share is 3/5. They are sharing profit and loss in the ratio of 3:1. So 75,690, 3:2, sorry, 3/5. So he will get 45,414. And Ganesh will get how much? 75,690. Ganesh's share is 2/5. And so his share is 75,690 into 2/5. So in this way we have to prepare P&L appropriation account. This is capital account 24,000. Then interest on capital is 8,000 rupees, 6,400. Then interest on drawing is 1,500, 1,000. And commission is 10% on 84,100. How do we arrive 84,100? 1,22,500 minus 38,400. 38,000 is 24,000 plus 14,400. So we will get the 84,100. So 10% of 84,100 is 8,410. So 1,22,500. 1,20,000 is net profit. Interest on drawing is 2,500. So 1,22,500. From 1,22,500, if we deduct 34,000 and 14,400 and 8,410, we will get 75,690. That should be shared between the Vignesh and Ganesh. Vignesh will get 45,414. Ganesh will get 30,276. So interest on drawing, how do we calculate drawings during the year? The Vignesh is 30,000, Ganesh is 20,000. Vignesh withdraw 30,000 rupees, Ganesh withdraw 20,000 rupees. Vignesh 30,000, Ganesh 20,000. So 10% is the rate of drawing, interest rate of drawing. 10% is 3,000. But we have to calculate interest on drawings for 6 months because date is not mentioning, and so 1,500. Here the 10% is 2,000, date is not mentioning, and so we have to calculate for 6 months. 6 means 6 divided by 12 is nothing but 1 by 2. So directly I have divided the amount by 12. By 2. So 2,000 divided by 2 is 1,000. So interest on drawing is 2,500. So in this way we have to calculate the P&L. We have to prepare the P&L appropriation account. This question I have given for your practicing purpose. Read it carefully and do it well. We will meet in the next class. Thank you.